Hello and welcome to another update video about Bitcoin. Let's take a bit of time and take a look at the 4-hour chart again. Let's zoom out a little bit, and this is the chart the chart of the June lows. Yeah, so between June and today. Just, for the benefit of everybody, just wanted to emphasize again the higher level scenario here, because this is really where things are changing. Yeah, we still have a bearish possibility how this can unfold. However, as I've been saying for many weeks, if we form 5 waves of the November lows, which we did. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. And if we come down into the green support area, which we did, and if we hold it, which we did, then probabilities for a new bear market low are significantly reducing. I'm not personally feeling comfortable with calling out that the bear market has ended, but as you will have noticed over the last few weeks, and I would say months even, we've been focused on the upside, across the market. Now that was a bit later for altcoins because they didn't really show signals until I think sort of end of December, but we adapted very quickly to the impulses that we've seen. And the Elliott Wave method helped us with that, because what you eventually want to see is a 5-wave impulse to the upside. Now that happened here, for example, in November, and then basically progressed. Well, no, November was a diagonal, but we were still looking for another high here. Not necessarily a full impulse. Yeah, that would be wrong to say, but as we saw it would become an impulse, we were looking for 5 waves. So the 5 waves up are always a first strong indication that a trend has shifted. But the 5 waves alone do not give you enough confirmation. I had a few questions about if I could again explain what is needed that we can say that the bear market has actually ended. Right, so strictly speaking, you need to understand that this is all probability. So if I tell you confirmation, that something confirms something, this is not to be understood as it's certain. It's probabilities. The entire market is probabilistic and there are 0 certainties. But still, the probabilities help us. So what do we need from an Elliott Wave point of view that something like a trend change is confirmed? The first confirmation is that we have 5-wave move up in this case, that would confirm an uptrend. But that's only the first confirmation out of 3. So we've got that, check. The second confirmation is that we come back in a wave 2 correction and hold relevant support and do not break below the 78.6 retrace, check. The third confirmation is that we break impulsively above the previous wave 1 high. Check. We have all confirmations we need. There isn't more you can get at this stage, okay? So from a market structure point of view, we have to remain focused on the upside, and we have been since somewhere here, right? So it was pretty early. But still, being focused on the upside doesn't mean we can confirm that the bear market is over. But we have all the confirmation levels that we need to basically do it. Now, I'm not ready to do it because there's always another scenario, and it's not crystal clear yet. Yeah, it's not like back in December 21 where I could tell you with very much certainty that we will go down below 29k, because there was for me only one scenario at the time. The chart was entirely clear. And if any viewers from back then will remember that, yeah, okay, you know, we still needed to wait, I think it was for 58k to cross before we could say, okay, we are now in a bear market. We couldn't say it obviously at the all-time high. The same way here, we need to see the price move a little to confirm the bear market is over. And that point will come at some point. Yeah, that will come at some point. It's just that be aware that also back in December 21, everybody called me too bearish, right? Same way now, I see these comments, I'm too bullish. Now, I'm not too bullish, okay? I'm simply looking at market structure. Probabilities at the moment suggest we are in an uptrend. Yeah. Now, this can unfold in various ways. Yeah, it doesn't need to go up in a straight line. There are different scenarios how this can unfold. We could even still be in this wave 2. That's why we have an alternative wave 2 here. This move down of the February high could have just been an A wave. This rally to the upside, even though very strong, could have been a B wave, and we will now come down in the C wave. But again, then also that box is relevant and should still hold. It's really only below 17.4k that we have to start expecting bear market lows again, new bear market lows, right? So this is important. But there is still a bearish scenario that could unfold, even though it has become less likely, because what can happen is that the June low to August high was a wave W. We came down in an X wave, and we're now rallying higher in a Y wave. And within this Y wave, we have an A wave, a B wave, and a C wave. And that would also explain why this was so short, because a B wave can be very short. That's just sort of some of the ideas, right? And after the WXY, you would make a new bear market low. So again, but that would take us sort of into the 45k region. So you don't want to miss that, right? So there is being bullish and being bullish. Certainly in an uptrend, you have to have some kind of a bullish bias. Otherwise, I don't know, you know, if in an uptrend you're waiting for lower prices, you can't make money, in my opinion. So it's just sort of a little bit of perspective I think everybody needs to get, everybody needs to have. There is still the risk of coming down lower. There is still the risk to come down at least into the green support area, but that would still all be part of the higher level scenario. You know, I'm obviously looking at the larger time frame, but I'm also looking at the lower time frame. And eventually this should create a picture on different time frames, telling you likelihoods, trend reversal areas, support areas, yeah, and the trend. So it depends on which time frame you're looking at. I mean, if you look at here the 4 hour and we zoom out, I mean, you could even call this the daily time frame, right? This scenario or this setup will not change very often. Yeah, I could make it very simple in this analysis and just say, all right, you know, we moved up in 5 waves. We have our wave 1, we have our wave 2, and I can ignore all the subwave structures and just highlight, okay, we had our entry point here. Now we just let it run until we reach wave 3 top. Then we formulate another support area for wave 4 and rally higher, right? But that wouldn't help a lot of people who want to trade and understand the lower time frames, which is why we look at the 1 hour time frame as well very often. And I think it gives a lot of people a great overview, but note obviously that this changes much more often. Yeah, it's a bit like a trend line that occasionally breaks, right? That needs to be redrawn. The same way support areas fail at some point and need to be recalculated and reset. It is just what it is. So what are the different scenarios here on the lower time frame then? Well, on the lower time frame, we have these impulsive price movements of the 10th of March low. So we have 5 waves up into the 14th of March, 3 waves down to the 15th, again 5 up, and possibly this is going to be a 3 wave move down. So I can count here still this scenario as a valid count, 1, 2, 1, 2. And I don't know which one of these is going to work out, but the key is to understand those key support areas. They are both likely. Always remember, I only show you reasonably likely scenarios. I'm already filtering out all the unlikely scenarios anyway. So sometimes I get the question, out of these two scenarios, which one do you think is more likely? I can't tell you because they are both likely. They are both. I would never waste your time and show you unlikely scenarios. It's pointless. Within the likely ones, there sometimes is one that is unlikely compared to, relatively unlikely compared to the other one, but they are still all reasonably likely. So you need to understand that we've got here the two scenarios, either a 1-2-1-2 setup where we could be holding 24,940 and then rally in the third wave. And in this scenario, we completed here wave 1 on the 20th of March, came down in a WXY structure. In this Y wave, we've got an ABC, and that's fine. And then we've got the other scenario. If we drop below the orange support box, we morph into a larger wave 2. So we can count it like that and say, okay, wave 1 to the upside, but then also a similar WXY structure, and it could send us down lower. Support here is 21,550. These are the two main scenarios that we're watching out for on this time frame. But either way, as long as we're holding 21,550, focus is on higher. Having these support boxes doesn't necessarily mean it needs to go back into the box. If it does, I think it's an interesting reward versus risk or reward to risk ratio setup. If it doesn't, it is what it is. You can still take a trade, but obviously you wouldn't have the good reward to risk. It can still be decent reward to risk, but eventually you need to decide your own trades, of course. We had this rally earlier today. It so far failed to rally in 5. It can still do it. Yeah, absolutely. But at the moment, it's only a 3-wave move. So to confirm that we have bottomed here already, which is possible. At the moment, I'm counting it as an ABC, just because the move up is only in 3 waves. But if we get 5 and get a meaningful break above the X wave high at 28,950, I'm going to count it as already, all of wave 2 is already in. Until we get that confirmation, I'm counting wave 2 still in the making. It's tough at the moment, but key is to understand that as long as these boxes are holding, the trend is higher. Yeah, these are the invalidation points, or not really official invalidation, but they are the points below which the trend is most likely changing. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.